Hello, Oracles. Today we're going to discuss something that could be coming up potentially in the next year or so, and that is how is Tesla stock going to handle a recession? Back in 2022, we saw a massive pullback in Tesla stock, and then as of August 5th, we had some fears about a recession coming up, along with a lot of other things going on in the market with the Japanese carry trade and things like that. But we saw a massive pullback in the stock at that time. The whole entire market pulled back, but Tesla hit a low intraday of near $180. It is now back up over $220 at the time of this recording. So, with the scare of what's going on potentially back on August 5th, and where we're at right now with the election coming up, still discussions about, the Fed hasn't even started cutting rates yet. We have the 10 and 2-year yield curve about to revert, which is a signal that we could have a recession coming. We have the Psalm rule that has been triggered, which has indicated a recession 100% of the time. So, do we have a recession coming or not? That has still yet to be seen. However, if we are going to get a recession, how is Tesla going to handle that? So we're going to discuss a little bit of that today, and you guys could put your thoughts in the comments below as to what you think is going to happen if we go into a recession with Tesla stock. All right, if you guys like this kind of content, if you could please hit that like button down below, subscribe to the channel if you want to see more of this. On here, I'm going to be discussing Tesla stock, a lot of dividend plays, a lot of different things you can do for your portfolio that are going to be stress-free and help garner significant returns and income in the future. All right, first things first, we're going to take a look at some of the numbers coming out of China as far as today goes. And Gary Black tweets out, Tesla China insured registrations were a solid 14,300 for the week of August 12th through 18th. After 7 weeks, China's Q3 is plus 16% year over year and plus 34% quarter over quarter. Quarter 3 remains on track to be Tesla China's best quarter ever. So that, of course, is great news because, we know over the last 2 years, especially since 2022, where we saw a massive bear market, Tesla pulled down significantly, and the Fed was raising interest rates at an alarming rate. Very fast, the fastest they've ever raised rates before. So looking at the timing of all that, Tesla took a massive hit over that time. Now we've been waiting for interest rates to come down because obviously higher interest rates means it's more of a loan that a customer is going to have to take on to be able to purchase a Tesla itself. One of the reasons I haven't purchased it yet. Obviously, a lot of other things too, bought a house, things like that, but paying upwards of possibly 7% on interest, and Tesla has done some great things about deals doing 1.99% financing, but that has still taken its toll on Tesla. So with interest rates going to be coming down soon, we are going to be seeing a potential increase in Tesla sales. We've been seeing China ramping up significantly, insured vehicle units going out over there, so that could bode very well for Q3 numbers. And so if this all continues and we don't get into a recession, this could be very, very good for Tesla. As interest rates come down, sales will be picking up and increasing. It's not going to happen immediately, especially depending on what the Fed's going to be doing with rates. This week, we have the Jackson Hole Symposium going on where all the Fed members get together and discuss what's going on with the economy. And on Friday, we should be getting a speech from Jerome Powell where the market is anticipating him discussing what rate cuts we could be seeing coming in September. The market right now is anticipating a 100% chance of a rate cut in September, just trying to figure out if it's going to be a 25 basis point or a 50 basis point cut coming. So now one thing to take into account as well is it usually takes about 18 months for Fed hikes to take full effect. The last time they hiked was about a year ago. It was July of last year. So we're only about 12 to 13 months out from that. So we probably still have potentially another 5 months worth of effects from the interest rate hikes to take hold of the market and the economy. So any rate cuts we get are also going to take some time. You may see immediate interest rate numbers showing out there, like when it comes to purchasing a house or purchasing a vehicle, those might come down. But if we are still feeling the effects in the economy of rate hikes, that could mean more pressure on the economy itself. That could mean more businesses going under. We have seen the most bankruptcies we have seen this year than we have seen in the last 13 years. That could continue going on for the rest of this year in the beginning of 2025. If that continues to play out when we see it for the next 5 months, may see that recession coming early 2025, Q1, maybe early Q2. That all depends on how we get through the next few months. And again, it may take a longer time for the Fed cuts to take effect. And if we see economies sliding quickly, the Fed may cut rates quickly. And historically, we've seen the Fed cut rates quickly just to try and catch up to all the effects that the hikes made. So just because they're cutting doesn't mean we're going to counteract any recessions we could be going into. It might take some time to come out of that, as we have seen historically. So if that all plays out, rate cuts helping Tesla sales going up aren't really going to mean a lot, because if people have no money because we're in a recession, it's going to be painful. So any recession we get is going to be ugly for every company out there. Some companies just don't get hit as hard, like value plays. A lot of the companies I've been talking about recently will not get hit as hard, but they're still going to get hit. Tesla, being a growth company who especially recently hasn't shown growth numbers, is going to be struggling just like a lot of other growth companies out there. So Tesla is going to get hit hard in a recession. There's no two ways about it. It's going to be very difficult. Now, the good things that Tesla has going for them, depending on timing of this recession, is going to be they have the robotaxi and compact car. Robotaxi for me is not going to make a huge difference, but the compact car is. Tesla stated to us most recently that they're going to be seeing the production of this coming out in Q2 of 2025. If that holds true, we could potentially hit volume production by the end of 2025. If we are in a recession and Tesla's coming out with a vehicle that is under $25,000, that could bode very well for them, and they can counteract some of the maybe lost sales from the Model Y or Model 3 with that new compact car. So timing could be absolutely amazing for Tesla. Tesla is still continuing to grow their business. Despite the stock price collapsing in 2022, the fundamentals of the company continued to grow. Yes, over the last year, sales have dipped because of the interest rates. But again, if interest rates are coming down, Tesla could be getting themselves primed for some perfect timing for an explosion coming in stock price in 2026 to 2027. Again, the fundamentals underneath, they've got energy that's still pushing out there and growing significantly. FSD is still growing. When robotaxis are actually going to be available on the road, sounds like Waymo right now has about 100,000 rides they're giving out every single week. So the market is out there for FSD and robotaxis to take over. So this is going to bode well for Tesla as well, as long as they keep on going and they actually get FSD solved to where they want to be with level 4 and level 5 autonomy. So the timing of it could be very good. And this is something I have discussed several times over the last few years. These are the times going into a recession where the stock price coming down is that time. It's part of the reason why I sold a lot of my Tesla stock previously. Now, I still do own a good chunk of it. It is still 1% of my portfolio in the stock individually, but broken down between all of my ETFs, my IRA, my 401k, I still have a significant portion of my portfolio in Tesla stock. And what I'm going to end up doing is taking a lot of this cash flow that I've started to generate from myself within my portfolio to dump into the stock as well, anticipating this recession. Now, I'm not banking on it, which is why I still do have a significant portion of my portfolio in Tesla stock, but I want to be ready in case we do have that opportunity, because fortunes are born during bear markets. Not going to get much more of a bear market than during a recession. So looking at timing of that, if we get it, I want to be ready with cash flow and cash on the sidelines to be able to take advantage of this, because again, I think Tesla is primed and ready to go and come out of this. Because as I've said before, the companies that you're going to be paying attention to, like the Magnificent Seven, will get hit hard, but they're also going to come out the strongest. And Tesla, I think, is going to be great for this. They also have AI going for them, obviously with FSD, Optimus that's going to be coming out. The AI movement is still going to be happening regardless of whether we have a recession or not. We have a hard recession. Who cares? AI is actually going to help a lot of companies during this time, because they're going to be wanting cutting costs. Guess what happens when you cut costs? The number one cost is labor. If you've got something like Optimus, which I don't think it's going to be ready anywhere to the point in the next 18 months to like help companies cut costs, other than maybe Tesla in the factories on a very, very minute level. However, they see this and companies will be like, ooh, we don't want that to happen again. How quickly can we get this out there to be able to prevent this from happening and be able to cut costs going into the next recession? Because historically, we usually get recessions about every 10 years. It's now been about 14. So we can't really count COVID crash as one, because we V-bounced right out of that. And 2022 wasn't a recession, although people argue that we were in a rolling recession during that time. It wasn't officially a recession. So we're due. And now, if it happens again in 10 years from now, companies are going to want to be ready for that. That's where AI is going to come in. So Tesla's going to be priming themselves over the next, 5, 10 years to take advantage of this. So all of the things that Tesla is doing on a fundamental basis are getting ready for the future. This is something that, many Tesla bulls and myself have been talking about is Tesla's not a next year, 2 years out company. This is a 10, 15, 20-year out company that you're looking at here. Imagine it's like an Apple back in early 2000. I remember when I was in college in 1998, my roommate at the time had gotten the Mac. It was just the monitor. And I'm like, well, what do I do with this? I don't even know. But that was kind of Apple's resurgence coming back out into the market. And that was during the dot-com era where, obviously everything bubbled and then crashed. Then from there, 10 years later, Apple comes out with the iPhone. And we all know what happens from there. It took off. Now imagine if during 1998 in that dot-com bubble, or even after it crashed, you started buying into Apple. That would have been awesome. It didn't really do anything for the next 10 years, but since then, it was awesome. Even if you bought it before the crash, it would have been awesome to have. So now you're living in it. That's the same thing that's going on with Tesla in my eyes right now. In my opinion, buying Tesla stock now, even at these prices right now, are going to pay off handsomely in the next 10, 15, and 20 years. My strategy is just different. I know some people out there are all in on Tesla. I think that's awesome. So you guys have to do what's best for you in your own portfolio. But for me, I have that significant chunk and I'm ready for more in case that does end up crashing. Because again, if you bought Apple after the dot-com bubble crash, you'd be really rolling in it at that point. So that's kind of what I'm waiting for right now, anticipating that's potentially going to happen and I want to take advantage of it. So again, Tesla has all of these awesome things going for them. They are not recession proof at all. We go into a recession, Tesla's going to get damaged severely from a stock price perspective. But from a fundamental perspective, you have to understand that there's a reason why Elon and the Tesla team have been stockpiling significant chunks of cash. Elon has been talking about a potential recession for the last 2.5 years. He sees this as a potential coming. Warren Buffett's got $277 billion on the sidelines from Berkshire Hathaway. Elon has about $30 billion for Tesla right now, sitting on the side, waiting to see what's going on. So Tesla's ready for this. So if we get into a recession, financially, Tesla will not have any issues. They've got that compact car coming out, which can offset any of the lost sales they have from a Model 3 and the Model Y perspective, and the Cybertruck as well. But typically in a recession, most of the higher end vehicles do relatively well because people who have more money don't get hit as hard. If we get into a serious, deep recession, they will, but that's usually like if it's lasting for a long time. So those vehicles won't do as bad, and they're not a big significant portion of Tesla's sales anyway. It's the 3 and the Y that would get hit the most. So if we have a compact car to offset that, that's even better. And then again, Tesla with the energy piece coming up as well, people always need energy. What is one of the sectors that people will always dive into when we go into a recession? That's energy. Because just like consumer staples, people are going to need to, turn on their lights, run their refrigerators, have power going on at all times. So that typically does better. And Tesla's going to have that growing. It's not going to be enough to offset lost sales from EV sales, but it's going to be enough to kind of soften that blow a little bit and show you what the potential is going to be for the future when we get to the next recession and energy is significantly larger than it is now. By the time we get to the next one, energy might even produce more sales and revenue than vehicles do. We'll see how that goes over the next 10 years. So that's my thoughts about how Tesla's going to handle a recession. Again, to summarize, it's going to get hit hard, but I think it's going to present us with some massively awesome opportunities to buy in to a company that's going to be one of the absolute best companies over the next 10, 15, and 20 years. So you guys can let me know your thoughts in the comments below. How do you think Tesla is going to handle a recession? What do you think are going to be the positives and negatives going into it, coming out of it? And are you ready to buy some if we do get that massive crash in a recession? Thank you guys so much for watching. I appreciate all of your support. Have a great one.